Hi, everyone. Very exciting session planned for today. We have some of the leading industry experts from a knowledge perspective available to discuss some very interesting topics. So I appreciate all of your time, your willingness to participate on the panel. Let's go ahead and jump right in.
Well, waste management, we're largest waste hauler in North America. We have about 20,000 trucks, of which 1,600 are CNG, LNG, but mainly I'll focus on CNG. So we're already committed to using alternative fuels. In a perfect world, we'd snap our fingers and convert our whole fleet to CNG today. We're not going to do that. We're really not going to retire a truck until it's ready to be retired. But when we do replace it, probably 80 to 90% of our new replacement vehicles are going to be CNG over diesel. So we're committed to this, number one, because it's cheaper. The cost of CNG equivalent to diesel is about 1/3 the cost. So right there you have that permanent benefit. And in addition, it's clean burning, environmentally friendly, which gives us a huge competitive advantage if we go to a municipality and say, hey, we would love to pick up your trash for the next 10 years, and guess what? We're going to do it with clean burning fuel. So that certainly helps us. This whole area, as far as the tax goes, is still evolving. What we're able to do as a large company that spends a lot of time and effort on government affairs is to try to work with the legislators and to try to make sure that the type of provisions that are in there are going to be favorable to us. Whether that means having credits and incentives for buying these new CNG trucks over diesel trucks, or how the fuel is going to be taxed in relation to diesel fuel. There's a lot of interesting issues. We're going state by state as we start to buy these trucks, and we're finding that the state laws are way behind. Some of them don't even address how to tax CNG, whether it's an alternative fuel, whether it falls under the definition of a motor fuel, whether it falls under the sales tax statute versus the excise tax statute. So we're working with the states, and whether it's submitting a letter ruling to find out how the heck this thing is taxed, or to try to shape in the legislative sessions to try to shape favorable language to help waste management. To go beyond that, we are producing our own fuel. When we first started to buy alternative fuel trucks, which mainly was in California because the emission standards are much higher than the rest of the country, so we had to go out and buy these alternative fuel trucks, and we had to buy the fuel as fuel from suppliers. Now we're kind of in the next generation where we are producing our own fuel. Basically, we're building a fueling station like you see at Sam's Club or Walmart, and we are buying natural gas right from the pipeline. We're putting in our own compression equipment, and we are producing our own fuel. So we're going above and beyond buying the fuel from someone and having that somebody tax us. We now have to figure out how the heck do we tax this ourselves, and the federal excise tax that you pay to the government and the state excise taxes, we have to pay like you would pay a use tax. We have to figure it out and pay it ourselves. And that's another area that the states really weren't prepared for. So that's the direction we are going in, and the states are trying to catch up because some states, they don't want this alternative fuel, even though it has a lot of benefits to the environment, to go untaxed, okay? Because every time a truck converts from diesel to CNG, or a company, instead of buying a diesel replacement truck, buys a CNG truck, if those fuels aren't taxed at the same level, the state is losing money. So, sure, we would like to be able to buy the CNG and not pay the tax, but if we do have to pay it, which is fair and equitable, we want to make sure that we're not disadvantaged, and where we can, we want to try to get some favorable treatment, focusing on the pollution element to say, hey, we're taking a diesel truck off the road, we're replacing it with an alternative fuel truck, and that's good for the environment. we want the states to reward environmentally conscious companies and hopefully give us preferential treatment. And we've been able to do that in a couple states. So we're committed, and it's a growing area. And we also have to make sure that the same benefits that one might get when they buy diesel fuel in terms of fuel tax refunds are available on the alternative fuel tax side. Again, sometimes the statutes are not written, they're not detailed enough to include this. So we've been very fortunate to get to the forefront legislatively and trying to impact some positive change for our industry. We're going to do this regardless of the tax benefits because of the cost and the environmental advantages. But if we could get additional tax benefits, then that just makes our business case that much stronger.
You have kind of three different paths that the states have taken. They've come out and from a statute or reg standpoint, they've said biodiesel is a special fuel. So you have very clear guidance on how to treat that. Or they've come out from a policy standpoint. Maybe they've issued a notice. Maybe they have something on their website. Website isn't something you can take to court. You can certainly see what they're thinking, but it's something. It's some form of guidance. And then you have kind of the last group of states, and I think it's what Leonard is seeing on the CNG side, where the states are not giving guidance. New Mexico is a great example. There was a taxpayer that basically pursued through the legislature a change in the definition of biodiesel and special fuel to basically get some resolution to how biodiesel should be treated in New Mexico. That just came out in the last 2 to 3 weeks. So even though biodiesel, really as a matter of the federal credit has seen, it's distinct, and you've seen an increase in that in the marketplace and in what we're seeing, both from the federal credit and some of the state mandates. There's a handful of states out there that say you have to have a percentage of biodiesel in all diesel fuel. New Mexico is one of those that's coming. So, it's really important to be on the front end of these changes if you can. As Leonard was saying, you need to get the treatment that's beneficial to us as taxpayers.
Is states offering a decal program like they do here in California, whereby all of our alternative fuel trucks, they obtain an annual decal, they pay a flat fee, and they then provide the fuel tax vendors with a copy of that decal, and those vendors don't charge the state excise tax. And it almost always comes out in the taxpayer's favor that you're paying a lot less money by paying that annual decal rather than paying the tax on every load of fuel that you get. We would love more and more states to go towards the decals, and initially that's what we thought the trend would be. And now we're battling Florida, who's going the opposite direction. They're realizing that the decals are costing them money, and they're trying to remove them and replace it with a tax. And now we're kind of going back and forth and acknowledging the issue with them, but saying, you know what, keep the decal, but just raise the tax rate to kind of get us back to where we were, because administratively it's a lot easier for us to pay an annual decal fee and be done with it.
Yeah, like in Florida, the decal fee was, let's say, like if you do it on a per truck basis, it's an annual filing. You pay it once a year, you file once a year. In states that have the monthly compliance, there's added compliance costs that go into that. But the way the numbers were working out was like on a per truck basis, an alternative fuel vehicle had paid a tax of around $300 or $400, depending on how much the vehicle weighed. But a diesel-powered truck would pay, on an annual basis, roughly in the neighborhood of $2,700 per year in excise tax. So they use the same roads. We can understand why they're wanting some equilibrium there with the alternative fuels tax not being up where the diesel and gasoline taxes were. But currently there are 15 or so states that have active legislation open right now on dealing with alternative fuels. And with the way that natural gas is, there's such an abundance here, and there's so many benefits for using it as a fuel. There's no storage of it. And it's delivered via pipeline. There's no spill You don't worry about it spilling, or if it leaks out into the atmosphere, it turns into vapor. And the tanks that they're supplied in or stored in actually go through more rigorous testing than anything that the gasoline or diesel side experiences. I think a cylinder of CNG has to withstand a bonfire test and a test with a 30 caliber bullet where it does not penetrate the tank. And so if you start, the history is starting to become developed to where there's fewer fatalities and fewer, explosion-related accidents with alternative fuel vehicles. But the governments are trying to incentivize, there's a lot of incentives out there. I think Florida has one where it's a $25,000 per vehicle, capped at $250,000 a year per company on converting over or buying new alternative fuel trucks. Pennsylvania just put something else similar to it, but it's not as beneficial as Florida. Pennsylvania actually, you get a credit or a rebate based on the differential. How much more is that CNG truck than a diesel truck? They're not that much more. So it's less of a benefit in Pennsylvania. But there are 15 states right now with active legislation on alternative fuels.
And I think the interesting thing too, in looking at all the activity in the alternative fuel world, is looking at where kind of the general point of taxation is between kind of your historical petroleum products, gas, diesel, and jet. We're all familiar with that in this room, right? It's at the rack, maybe at a license level, but it's not at the retail level generally. I mean, that is, in fact, over the last 20 years, we've moved far away from the retail level, up to the refinery level. I think Rich will even say maybe feds are looking at the refinery level at one point or another. We're at the rack today as the highest level. But, in general, alternative fuels are taxed at the retail level. Are you putting this alternative fuel into a vehicle? That's the point where that taxation attaches. I mean, there's exceptions to that, but that's generally where it is. And, to Leonard's point is, give us a decal once a year and put it on there. That's how they're tracking it. You have the truck that uses CNG, you pay for the tax basically up front. So as states move towards or recognize that alternative fuels in whatever form they come in are going to play in the market, which direction are they going to go? Are they going to basically enhance the retail base or retail level tax that they already have in place? Or are they going to try to basically pull those alternative fuels into, kind of the classic gas, diesel, and jet tax structures that we're familiar with? And I think that's going to be the real rub as we look forward to that.
And you're going to have some you'll have to look at, because natural gas will have a potential for sales tax on it along the way. So you've got the potential of natural gas sales tax on one end and a motor fuel tax on the same stream. And some states are already ahead of this. Some states actually issue exemption certificates or have exemptions if you are compressing that gas and if it's going to become taxable as a motor fuel, they will relieve you of the sales tax and gross receipts tax on that natural gas stream. But not all the states have that in place right now. So.
Yeah, from a federal standpoint, the government has assessed the tax similar to a lot of the states. Is basically when it's placed into the fuel supply tank of that motor vehicle. So consequently, that is basically at a retailer or at a user level. And you end up with so many taxpayers, the compliance issue just becomes much, much too difficult. And as the usage of these alternative fuel vehicles becomes more and more, the compliance issue will be far greater. And that's why the federal government was looking at alternative forms of taxation to the cents per gallon or cents of gasoline equivalent. Well, also difficulty is that with Congress being unable to extend a lot of these things farther out than more than a year or two, it makes it very, very difficult for businesses to make plans. For example, just with the biodiesel and the alternative fuel credits, twice within the last couple of years, Congress has failed to extend those credits. And granted, they did make those credits retroactive once they did get around to it, but still, even for this year, the credits on the biodiesel and the alternative fuels are due to expire at the end of this year. So become the end of this year, they're going to have to go through the same argument again about, do we extend it, or are we just going to let them lapse again for another year? And it's very difficult for a business to make plans about purchasing equipment and putting in the compressors to fuel your vehicle. I was, before I retired with IRS, I was on a panel or group that was looking at the VMT. And what's interesting, and what's not brought up this morning, is that it really is not looking at it being an alternative tax. What they're looking at is behavior modification. And when you think, well, what do you mean behavior modification? Well, what they want to do with the VMT tax is to modify first the type of vehicle that you purchase. Obviously, to purchase a vehicle with less pollution, more miles per gallon. Secondly, they want to modify what roads you drive and what time you use those roads. So, for example, in San Diego, they would want to have a higher tax rate for somebody who drives a F-150 pickup truck and drives it at 7 o'clock, 8 o'clock in the morning during rush hour on the 405 freeway. If you're driving at that period of time, you're going to pay a higher tax rate. But if you go out and buy a Prius and you make an arrangement with your employer to come in and work at 9 o'clock and you take side streets to get to work, your tax rate will be a lot less. And yes, they will be collecting a tax, but it will get them the desired benefit of behavior modification on how we actually go about getting back and forth to work and running our errands.
I think the other issue you have is, does anyone in the room know, on average, how much fuel tax you pay? You personally, when you fill up your car. I have been in this industry almost 20 years, and I, in preparation for this conference, calculated it for myself for the first time, because I thought, well, how much am I paying? You know, if they converted me to a registration fee, you know, annually, I can't get my car registered unless I prepay my fuel tax. You know, and whether you base it on how many times I fill up, how many miles I drive, you know, whatever the factor is, it's on my usage, right? Well, it's less than $1,000, but that's $1,000 that I'm already paying, and I don't know that I'm paying that, right? And I would hazard a guess that most Americans have zero idea how much they're paying in taxes at the pump. I echo Rich's comments. I don't think that's going to happen for a number of reasons. Now, can they build in something with an electric car when you buy it? You know, now, if they're trying to promote those cars, are they going to add on a surcharge right when you buy it? Probably not. So, you know, there's some competing influences here in, well, we want higher miles per gallon vehicles, but how are we then going to tax it if they're not paying at the pump?
The purpose is to benefit the roads and to be there for the construction and the maintenance and the rebuilding of our roads. And the excise tax is not kept up with the needs of the roads. And so a point and example we were talking about earlier is that there's no indexing there's no CPI or index on the excise tax that will increase it from year to year. If you look at the state level, if you pull like some of the state rates, it'll say your tax on diesel is X cents per gallon. Well, within that X cents are other components. If you look at Florida, out of the 31 cents on the diesel, only 4 cents is for excise taxes. 4 cents. The rest of it is there's actually a privileged sales tax embedded in there, and that one's actually indexed when the excise tax is not. So the issue is it hasn't kept up. And then you've got other issues with, you know, trying to get better economy in your fuel, going to alternative fuel vehicles. What's the right answer to get the right amount of tax that will support and sustain our growth and our road use?
Yeah, the federal government hasn't raised the federal excise tax in 20 years. And the cost to build a road has gone up by 30-something%. So you do the math, and we're way behind. So if tomorrow or January 1st they decided to bring it up to 2013 standards, I think that would be a pretty bitter pill for people to swallow. If they did it gradually, okay, you know, that's better than all at once. And then presumably they'd have to continue to index it every year. But that's really the only way they could keep up with the predictions of what it's going to cost to redo the roads. And every mile that's driven and every day that goes by, I think the roads get worse.
Right.
I've
Yeah.
been thinking about the VMT, and I think for a company like Waste Management, I would like it, assuming that if you took generically, the average person drives 12,000 miles a year, they're paying X amount in tax. We're gonna replace that with this VMT and come up with a per mile charge that you pay once a year when you pay your registration. That is gonna create, you know, some equity, okay? Or allow for the money, additional monies to be collected, because really, if you want to bring up the federal excise tax to where it should be, we're all going to be paying a lot more. If they replace it with the VMT, it can't get us to where we are. It has to go beyond that. Okay? So we as a company, we only get about 5 miles a gallon in our garbage trucks. We're paying, and again, I'm talking about alternative fuel, but most of our trucks are still diesel. So we're paying a lot of money per year on our diesel fuel that we buy. Well, a good portion of the fuel that we buy is burned when our trucks are off-road, when they're at the airport, when they're at our landfills waiting in line to dump the garbage, okay? We're paying tax on all of that. We don't get any relief there. Secondarily, a good portion of our fuel is burned to operate the compaction device on each truck, okay? But when we buy a gallon of diesel fuel, we pay tax on all of it. So if somehow we went with a VMT system and they came up with the right rate based on how many miles I drive, I'm not going to have to pay tax for the fuel that is being consumed to operate that auxiliary equipment. Now, it would also be nice if this calculation of miles traveled per year was just on-road miles, the wear and tear on the on-road miles, not when I'm off-road. So I may be further ahead if they went to that kind of approach.
I'd heard one suggestion that would solve all of the transportation issues.
It's interesting in that most of the taxes are levied per gallon. So I've been in Texas for over 10 years, and I remember that, you know, with your Kroger card, you were able to get 99-cent gallon for gasoline. Well, the fact of the matter is, at $3.50 today, you're paying the same amount of tax in that. In Texas, it was about 50 cents a gallon between federal and state taxes. And the average person is not going to appreciate that. They're going to assume, well, I'm paying more, like a sales tax. If the price of a refrigerator goes up, I pay more sales tax. But it's not the case, although California, they hit you with sales tax and excise tax on fuel.
Yeah.
I think what we're going to see, you know, we're seeing it now with the vehicle mileage tax. A number of states that we've mentioned are already looking at that. And I think because there's been some studies on that already, you follow what's already been done. And so I think there will at least be some evaluation on that in a number of states, and we'll hear about that. But, who knows? Maybe they'll do something from a tolling standpoint, throw up a toll booth over your favorite highway, right? You get your toll tag.
There's no uniformity. I can start with that, or limited. They're trying to incentivize the legislations, or the intent is, natural gas is abundant here in the United States. Why don't we see more infrastructure, more use of this? There's a lot of benefits to natural gas fuel. There's big companies that have access to that gas. There's a cost to pulling it out of the ground. And the rate right now at retail, if they want to make sure they're going to recover their costs, so that's why the government's putting, it's one of the reasons why the government's putting a lot of incentives on alternative fuel. Right now, the industry as a whole, there's about 150 gasoline stations across the United States. There's 75,000 diesel stations and 1,200 alternative fuel stations. The industry is building 20 to 30 a month. So you take that and you say, where are they? They're trying to incentivize. So they're offering, a lot of the states will offer credits or refunds or some form of incentives on converting to natural gas vehicles. Depending on how the language is written, it's either, if you buy a new truck, you get X dollars per truck, or if you spend Y dollars more than your diesel cost, you get some of that back. Other states are saying, well, if you build infrastructure, we'll give you a tax credit up to, it's usually capped depending on the state, up to X dollars of your, take 50% of your investment in that site, whether you build a new CNG or LNG station or you add a pump onto your existing station, there are incentives for that. There's a movement to move away from the decals, and the states that have decals, Texas is another one. That's going to flip to a pay at the pump. The issue that we're seeing states struggle with, and Florida struggled with this, is not understanding there's vastly different energy contents within a gallon of diesel versus a gallon equivalent of CNG. And so trying to get the tax rate, right now everything's tied to the gasoline gallon equivalent, GGE. In 1993, the Weights and Measures put a CNG task force in place to come out with some guidance for consumers who were looking at alternative fuel vehicles. And this was on an individual or more, non-fleet basis. So that's why they tied it to gasoline. Now that this is moving towards fleets, you've got a lot more fleets converting over to alternative fuel. Buses, mass transit. I think right now the waste industry is leading the way in terms of conversions, but the mass transit,
Taxi cabs,
yes. I think there's like 1 in 5 mass transit buses, vehicles today are alternative fuel. So there's a lot of varying issues that are involved with this, but the GGE conversion rate that's out there right now, that Weights and Measures currently has a proposal to come up with a uniform DGE equivalent so that you have it equated back to a gallon of diesel fuel.
We as a company, we're doing business in every state. We've been getting involved with the legislative process enough that we could come up with this perfect model legislation that would, of course, benefit us. We could pitch it to one state, the next state, the next state, but it boils down to what is it going to cost us if we give you this versus that. And we could have 10 principles on it. We might only get 4 in this state and 5 in this state because it comes down to them trying to balance their budget, or they're going to give our industry this, they got to take it away from another industry. And at the same time, like in Florida, we're dealing with manufacturing sales tax issues that are worth X amount to my company. So we got to balance the two and really, what battle do we want to fight in any given year based on where our spend is going to be, based on our competitors getting the same benefits we do. It becomes very, very strategic. It'd be great to have model legislation like you have for IFTA. Maybe you'll get there one day. I know that there are FTA and various industry groups trying to do that, but some states are way further ahead than other states, so it's probably going to take a while to get there.
So I'd like to take this opportunity to thank our panel members for being willing to stand up in front of us all and guide us with their wisdom. I appreciate your time and your thoughts and your comments, and thank you everyone for coming this afternoon.